slightly getting on my nerves because this is like the third recording I have done. The first one, I didn't know my mic was turned off. The second one, I kept on getting bad phone calls. I had to shut my phone down. So I just hope this one goes through. Uh, all right, what's going on, people? Hope you all had a good weekend. We're just starting the second quarter of the year, so the first 3 months of the year is done, and I hope each and every one of you has a good trading year. If you've done your arse in the first 3 months, well, I hope you learn from your mistakes, journal whatever you did wrong, and improve on it and stop doing dumb shit. Uh, this is not going to be a trading review. This is no um insights of what I have in the market, but is going to be is a video on risk management and money management. I got a couple of messages on Instagram, and I was asked what was my money management plan and risk management, how I manage trades and whatnot. Now, before I go ahead, I want to say this: if you watch this, my money management plan doesn't work well for you, please, I beg you, keep it to yourself. I clearly don't want to hear about it. Now, the reason why I'm saying that is because everybody has a money management plan or a risk management plan. Well, some dumb fucks don't have any. But if you are a proper trader, right, you'll have some sort of money management plan, and if that works for you, that's fine. People need to learn how to respect other people trading styles and whatever they do. Like, I met someone once and he trades fucking algos. I don't even know what the fuck that is. I looked at his charts and he looked like trash to me. But I was like, yeah, I respect it. As long as you're making money, I slightly don't have a say. I shouldn't even have a say in whatever you're doing. So my money management plan works for me, and I was asked how I trade and what I look for. So this is just going to be about that. I want to make this video proper short, maybe about 10 to 15 minutes, and I want to end it. So first of all, how much do I risk on a trade? I risk 1% on the trade, and I must have had someone saying to me, "Oh, shouldn't you risk more and take advantage of it?" It's just more of a psychological thing. Like, I'm fine with risking 1% of my trade. I don't want to risk more. Now, the reason why I say I don't want to risk more is because the kind of hours I get from the trade, I know that risking 1% of the trade, I can easily do 20, 40. I can do a lot of percentage in a month, right? Because sometimes I take a trade and there was a day on a Monday and I must have done 30%, and I ended the week doing about 42% in a week. So I slightly don't want to risk more because I'm just fine with it. Because if you are someone that's looking to do this long term, I'm not just trying to flip a quick buck and go buy the new trainers that just got out or do some dumb shit with your money. Um, you need to have a trade plan whereby, come 20 years from now and come 5 years from now, come whenever, you will be ready, right, to use the same trade plan. Because I'm thinking to myself, if I get 500,000, if I get £1 million account or whatever, I want to know that I'm still gonna be able to trade the same way I'm trading and not have to change anything. Because you need to have a professional plan. That's what people do not get. People think, oh yeah, trading is all fun and rosy. Yeah, flip money, do this, show charts, but it is nice. You can get that kind of life from trading, but 9 out of 10 times, the kind of work you're putting in to get to that kind of level, when you get there, you're more concerned about being more professional than just stunting. I don't know if that makes sense. That's why I would never ever show. Now, let me not say never ever. I don't see the point of showing profits. The people that are like, yeah, show profit, yeah, I made this. I don't feel that's necessary because, like, I said it once and I said, if I ever when I touch £1 million account, yeah, $1 million account, I might not have, I might never ever tell anyone. You know why? Because I'm not even giving $5 to nobody. I don't care. So if I know I'm not giving you nothing, why the fuck do I even need to tell you? But at some point, you understand? So just do your thing, stay on your lane. Now, let me not deviate too much from it. First of all, I risk 1% of my current account balance. The reason why I risk 1% of my current account balance is because when I'm good, it helps me work from strength to strength. And when I'm bad, right? When I'm not on my game, it minimizes my losses a lot. Now, if you say you're risking 1%, most people think, yeah, if you lose 50 trades, that should be a 50% loss. But now, I need to lose about 68 trades or 62 trades or something like that to get a 50% loss. Then I need to lose more than 100 trades to blow my account. Because the reason why is because you're risking 1% of your current account balance. So if say you had $1,000 in your account and you lost 1%, which is $10, right? Your next trade I won't be risking $10, I'll be risking 9.9. And if I lose that, my next trade I'll be risking about 9.82. And I'll be dropping it as it's going down. But then say I took a trade and I must have done maybe about a 10R in the trade. So basically my $1,000 account has turned to 1,100. My next trade I'll be risking $11 instead of 10. That's if I'm risking 1% of my current account balance. Now, I don't know if that thing makes sense to you, but it's more like a compounding effect on steroids. Yeah, you heard me say that right. It's more like a compounding effect on steroids. People that do not have money management plan or trade management plan, they do not understand that trading is all about how much you can manage your money. People just think, oh yeah, I can make X amount of pips, so I should risk this X amount of money. But have you asked yourself, what happens when you get into a drawdown? Because every single one of us gets into a drawdown. I don't care. It might not be a yearly, it might not be a monthly drawdown, it might not be a quarterly drawdown, but everyone gets into a drawdown at some point. So you need to have a backup plan. You need to have a bulletproof for that. Because a drawdown is inevitable. Losing trades is you cannot avoid it. So you need to ask yourself, when that happens, how best can I minimize my losses? If you do not have that, believe me, sit down, get looped, right? Because you're gonna get fucked. I am telling you, I have traded once before without money management plan, and it didn't turn out nice for me. So I had to come up with so many things. I have tailored Excel documents that I made solely for myself. There's one of them that I took off of someone's Google Drive. I can't even remember who. If not, I would have recalled out his name. But I took it off of someone's Google Drive when I was starting out in trading, and the rest of every other thing that I use, I put the time and I made it myself. People don't understand that more times in trading is the preparation that is actually the fun part of it. Taking a trade doesn't like getting a 10R doesn't get me gas like, oh my god, yeah, I must have done a 10R today. It's the things that I do to get a 10R, the money management plan, everything. And when I see that happen seamlessly, I get into a trade and I'm talking about next 5 minutes, everything is panning out my way. I'm adjusting my stop loss to a certain level and based on what I see happening. Do you understand? So that's a fun part of trading. But now let me just go and show you the special I made to we're talking about risk management. So this is a spreadsheet I did for myself. I wrote this all out, and this is what I'm saying. You have to enjoy the grind. You have to be able to put in the work. I just sat down and I crunched up all these numbers, and I wanted to know what I'll be comfortable doing. The game is not so. I don't know how much I'll say this. You can make a lot from trading, but if you don't put in the work, you will never ever get that. I woke up this morning and I was working with someone once, and he wasn't just putting the work, and I got pissed. I just said I'll make out a rant like, just put in the work and you get the results you want to get. So, anyways, back to this. Now here it is. If you're risking 2% of your account, this is how long it takes before you hit a 50% drawdown, which is about 34 trades, right? So that's it. But for me, I risk 1% of my current account balance. So if I'm risking 1% of my current account balance, now you can see why I'm at 1% of my current account balance. I took a first trade and I ended up losing $10, right? I took a second trade and I ended up losing about it's almost 9.99 or something like that, right? Because of this figures 980. But as time goes on, because I'm losing only 1% of my current account balance, for me to lose a 50%, right? To get into a 50% drawdown, I need to lose 68 trades, 68 wholesome trades. If you're someone that's risking 0.5%, right? Say you started at 1%, then you drop down to 0.5%. Before you hit a 50% drawdown, it's so far away. It's actually so far away. You probably need to lose maybe about 70% of whatever. Now, these are the kind of things that will help you determine what your risk management plan would be. What is the strike rate? How many losses do you take in a row? What is your R? Because if easily, I'm not even gonna lie, right? Easily, I take about 2 losses in a row, 3 losses in a row. But then when I take that one trade that brings me back up, right? I'm getting about 8R from it, 10R, 15R from it. Easy. So I do not mind losing 3 trades in a row. But if you know that you're someone that has a poor strike rate and have a poor risk reward rate, basically you get about 3R, 4R. I'm not even gonna try and diss anyone. Everyone has their abilities, and I respect that. If you're putting the work and you've realized you're a 4R trader, no problem. If you know you're someone that gets 4R from a trade, 3R from a trade, right? Then you have to know how to make the best of that. I'm not gonna go over how to tailor your own thing based on your ability because that's based on whatever you can do. But you need to come up with a money management plan that basically adds fuel to your strength. That's just what I'm saying. Let me see what's the next thing I have. Then position sizing and risk management. Most people do not really understand how to use a stop loss and how to take advantage of the tight stop loss and open up your lot size. That's where position sizing comes in. Now, so I want to say I did a 3R, right? And let's say you wanted to reach 1% of your current account balance. Now, let me go to position sizing. I have a spreadsheet for that too. So here is it. Let's use a retail. All right, cool. So let's say you had a $3,000 account. So basically 1% of your current account balance is what, $30. Yeah. So this is $30, and you say normally you take a trade that you normally risk 15 pips on it. So that means for you to take this trade, right, $30 for you to take this trade, you need to put on an 0.2 lot size, which is basically $2 a pip. That is how much you need to put on that trade, $2 a pip. Cool. Now, if you do this, and every trade you take is a 15 pip stop loss you generally use. There might come a time whereby you decided to use a tight stop loss and you decided to use, say, a 6 pip stop loss. Let's just say something like that, right? You decided to use a 6 pip stop loss, and then you still go ahead and risk 0.2. My G, that doesn't make any sense. Why? Is because you have made your stop loss tighter, but then you're still using the lot size of equivalent when you're using a 15 pip. But mind you, right now you're using a 15 pip. Right, sorry, right now you're using a 6 pip. So that doesn't make any sense. So if you're using a 6 pip loss and you're using an 0.2 lot size, so let's just make a quick math. That's basically $2 a pip. $2 a pip, 2 times 6. That's basically wait, is this retail or this is retail? So basically, $2 a pip, right? That's basically, let me see if this makes sense. $2 a pip using a 15 pip stop loss. This doesn't make any sense. Say you want to lose 30%, 30 times 15. I'll just pull up my calculator real quick. So all right, cool. Sorry, my bad. So basically, right, I was mistaking this for a 20 lot size because I've traded with a spread bet broker before, so this is messing with my head. Anyways, 0.2, that's basically $2 a pip. So if you did $2 a pip times 15, if price moves 15 against you, so basically 2 times 15, that's 30. But mind you, if you decided to take a trade and you were using a 6 pip stop loss and you had 0.2 still, that's basically 2 times 6, that's 12. So basically you're risking about 0.4% of your account. If you say you wanted to risk 1% of your account, you need to understand how to use position sizing to the amount of risk, which is basically to the amount of pips you're willing to use as your stop loss. This is why trading is more of a planning thing. You before you get into a trade, you need to ask yourself, all right, how many pip stop loss do I need to use on this? What are my targets for this? How many hours can I get from this? You don't get into a trade and start thinking then and then. So before I get into a trade, I already have this to assist me. So say I wanted to risk $30 on a trade, or say maybe $50 on a trade, and I realize, all right, cool, I want to use a 4 pip stop loss. I'll simply just put in this, and it should basically say, all right, cool, I need to put in a 1.25 lot size. So before the trade already gets to my position, I already have everything planned up in my head. So I get on a 1.25 lot size, I put in a 4 pip stop loss, and I have my targets probably 80 pips. Mind you, if I'm using an 80 pip target, that's a 20R. So easily, I must have done 20% of my account. That is how you take advantage of position sizing and risk management. And then when it comes to long term, you need to. Everyone is trying to do a madness to get clout. Like you need to understand that you are in here to make money and nothing else. You're not in here to prove anything to anybody. Like I said, like when I got good, yeah, I had to leave social media because it was affecting my trading. And then I got to a point where I realized I am not trading for anybody. So if what you're comfortable with is making £2,000 a month, that's fine. If what you're comfortable making is £6,000 a month, that's fine. If what someone else is comfortable making is £80,000 a week, that's nice. It's all about yourself, the choice you make for yourself. This is more like you cannot define your happiness based on what someone else is making. Are you happy with what you're making? Are you happy with your consistency? If you're happy with that, then fuck what everyone else is doing. Honestly, fuck what everyone else is doing. You have to have that cocky mindset. trading is something that is just ego driven and you can easily lose your way. So you need to have that mindset whereby you say, all right, fuck what anyone else is doing. I am doing this. I don't give a fuck. If you don't have that, you always watching over your shoulder and looking at what the next man is doing. I know people that do a lot better than me, right? I'm not even gonna try and make it the best. I know people that do a lot better than me. And I don't care. Yeah, that's for them. That's fine. I am fine with whatever I'm doing. I am way, way, way above an average trader. That's good for me. And I'm making enough. That's fine. Other people that are making way less than me, does that mean I shit on them? No, I don't. Like, if you this is what you can pull out of the market. It's like you taking the piss out of someone's knowledge of something, maybe in school. Bruh, everyone has their own lane. Stick to your lane. Do not give any. If someone doesn't ask me for advice, I do not say shit to anybody. Why? Is because if they don't, someone doesn't ask you for anything, just shut up. Just shut your mouth. If I do not ask you for something, don't give me your opinion. I don't fucking need it. On a big man thing, I don't need it. So the next one is about let's go here. So for instance, all right, if you look at this, this is a wealth building analysis. This is one I took off of someone else's Google Drive. I can't remember who the person was. It must have been when I was starting. Someone posted in some group chat and I took it off. So now let's say you're someone that averagely knows what kind of stop loss you use at most in a trade. Say you're using about 15 pips stop loss at most in a trade, right? So we'll input 15 pips here, right? And let's say you're looking to make about maybe 25% a month. I didn't want to go for mad figures, 25 to 20% a month. So let's just make that 20% a month, right? So let's say you're looking to make 20% a month. You're risking 1% on your trade. You have a $5,000 account. Is that be 5,000, be 5,000 pounds, 5,000 units. Let's just call it 5,000 units. All right, and this is your equity every at the start of every month. This is your monthly goal, and this is your risk per trade. So basically, I'm on every trade you're taking, you're risking $50, but mind you, it's based on your current account balance. So this thing only accounts for monthly basis, and then your stop loss. This is how much. This dollar per pip. This is how much you're gonna be using. So basically, when you're taking this trade, you're gonna use about an 0.33 lot size, right? And it's the same thing that we had here. But anyways, 0.33 lot size. And this is to show you that the other one I did works. So if you look at this retail, so you're losing run risk 50%. Sorry, $50 and you have a 15%. See 0.33. I didn't even have to look at that. So basically, you're risking about $3.3 a pip. Your monthly goal is about 300 pips. The weekly goal is about 75 pips. Your daily goal is about 15 pips. So if you're looking for a one shot, one kill, whereby what that basically means is you're looking for one trade to make you your weekly goal. That means you're looking for a 5R. So that means when you take a trade, you're looking to make 5 times of that. So 5 times of that, that's basically going to be 5%. So 5% times 4, that's 20%. And that's it. Then finally, to round this up, someone must have asked me a question. I was like, oh yeah, whenever he takes a trade, he doesn't know when to stop. So he started the week and ran into profits and then ended up getting fucked up towards the tail end of the week. This was a problem I had because when I got good, I got cocky. I got mad cocky because I got good slightly really quick when I was learning how to trade. So there must have been a week whereby I did about £1,000 three times in a week. So I did about 1,000 pips 3 weeks in a row, right? Now you can call me out and that's your fucking business. I don't care. When I did this, I did 1,000 pips 3 weeks in a row. The only reason why I got that amount of pips was because I was trading the whole 28 pairs of the market. I was trading every fucking thing that was moving. CAD, CHF, whatever thing, CHF, JPY, anything that was moving, I was trading it. All gold, silver. I did not give two fucks. So that's why that week was just one of those weeks, or rather that month was one of those months where everything was just working out in my favor. And when I got cocky, you get complacent. Like you lose your values. You start feeling, all right, I'm untouchable. I'm the next best thing that's about to come out, and no one else has done this before except me. Well, mind you, when you're fucking around with too many pairs, your growth will be nice. But then when you get that loss, yeah, you're gonna get train run by losses. You know what happens when you run the train on the ground. You're gonna get ran by price. That's what's gonna happen to you. So my advice is if you're someone that does well, but then doesn't know how to keep your like you make money. You know you can make money, but you don't know how to keep the money you're making. You need to have targets. You need to have goals. You need to have aims. If you get into the market, ask yourself, what can I get this week? And someone asked me and said, what are you looking for every week? And I said, I don't know until that week comes. And the person, me, what do you mean by you don't know until that week comes? And I'm like, you cannot say I want to make 200 pips every week. Now, when you say something like that, it forces you to want to make 200 pips every week, even if there is no chance for you to make 200 pips every week. If you're saying you want to make 20 hour every week, 10 hour every week, I don't care, right? If you say you want to make 10 hour every week, you are slightly setting yourself for a heartbreak because every week you won't get the opportunity to make a 10 hour. So when that happens, what are you gonna do? Are you going to say, you know what, I'm not good of a trader? You get depressed. Or do you understand? You need to have you need to trade the market. That is what I do. So when someone asks me, I'm more of a short-term day trader, whereby in 3 4 days I want to close my trade. In a day I want to close my trade. Because most times my target gets met and I'm satisfied with that. So you need to have discernible targets and be realistic because the market doesn't owe you shit, bro. The market doesn't owe you nothing. It doesn't care about your feelings. It doesn't care if you need to pay your bills. It doesn't care about nothing. None of that. It will take whatever it wants to take. And you just pray you're on the right side of the market. That's why I don't care about being wrong about a move because you have to realize that no one is perfect in this trading team. Obviously, I am more profitable than I am wrong, but you need to stop expecting that something owes you something, so you need to take something from it. It doesn't happen that way. Stop feeling fucking entitled. It doesn't work that way. So so when someone asks me what do you look to make every week, can I say I don't know till that week comes up or till uh, the time gets near. Now the reason why I said that is because my pet pair is GBP right? I might be say, all right, cool. Once this week starts, I look at this and I'm saying, all right, what do I expect this pair to do? I might be expecting, say, 100 pip move from GBP I might be expecting 200 pip move. I might be expecting 400 pip move. But even as much as I'm expecting, right, I'm saying, all right, cool. How much do I want to take from whatever I am expecting? Because the market doesn't, in as much as your targets are getting met, you have to realize that this targets being met don't mean shit. So if you're expecting a 400 pip move or 400 pip goal at the end of the week, how much are you going to be satisfied with? So that's when I say, all right, cool. For this week, I don't think I can get much from it. So I'm going to go for like a three. I'm sorry, I'm going to go for like a 6 hour, for a 7 hour, 8 hour, 10 hour, I'll be fine. That's some weeks, right? I think it must have been like 3 weeks ago. And I posted on my Instagram because I knew something was going to pop on GBPS. It had hit an institutional level that I was waiting for. And as soon as it hit that level, I got excited and I posted and I was like, yeah, next week I'm clapping GBP And the next week I did 42 hour. My first trade had a 12 hour, compounded, it took an 18 hour, had a 1 hour loss the next 2 days, came back and made about another 15 hours. So I ended up with about a 42, 44 hour that week. Then last week I did only 10 hour because I was busy last week and I knew I wanted to get in and out of the market and I wasn't really sure about my bias. So it was one of those weeks whereby I needed to be nimble. So you have to ask yourself, what are you willing to take before a trading week starts? Ask yourself, analyze your pairs, do your homework, do your fundamentals checkups, whatever. And then ask yourself, what can this pair give to me? What can I, okay, now I believe this pair is going to do 200 pips. How much can I get from it? Because it's not every time that price will come to your entry level, to your exit level. Sometimes it might move halfway up. So you have to ask, all right, if this pair is in 200 pips, would I be happy taking 60 pips from it? You need to have these things down. And then when you hit your weekly target, learn to do something. One, either you stop trading, or two, is you cut down your risk. The reason why people do not know when to stop trading is because they never had a target. They just got into the market and said, oh yeah, God, please help me out. Moaned about it and got on their knees and started trading. And guess what? They will get fucked. Because why? You never even discern whatever you wanted from the market. So here you are on a Monday. You're risking 2% on the trade and you maybe got a 10 and you're up 20%. But then you do not know if you should stop, if you should continue. You're feeling good about it. It's getting to your head. Nick, 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 nick. Your dick is getting fucking hard and you just want to keep trading. And at the end of the week, you end up having a 2 plus 2, or worst case scenario, you're even on a loss. So this is something that you have to do. Discern a target before a week starts. And only discern a target based on what you think is going to happen. Do not get into the market and say, all right, let's see how much you can make. You can do that, but you need to ask yourself, what do I want from this? And when I get it, what would I do? Would I stop trading or would I cut down my lot size? Last week, I totally stopped trading on Tuesday. Tuesday afternoon, I was done. I went short Monday, Sunday open on crude oil, closed for about 4 hours. Went long GBP took 1 hour loss, went long again, took a 7 hour loss. So basically 6 plus 4 made it 10. And I stopped because why? I had my Nance burial coming up on Thursday. I had some family gathering on Friday. So many other things that I knew that if even if I could still trade, it will affect me. You want to have the best mindset. You want to have the clearest mind when you're trading. You want to be on your best game when you're trading. Any other thing shouldn't. Someone asked me how is it going to make trading work, and I said find whatever allows you to work and still trade, because you need to be on the best psychology level. If not, there are things you won't be able to see, that you do dumb shit, you get emotional. But yeah, basically that's just it. Probably took the rant a little bit too long, but I just felt it was necessary for people to understand what trading is all about, which is just managing your money. If you do not understand, if any someone probably tells you anything about trading, it doesn't mean do not accept it. Trading is all about managing your equity. And every single person that I know that knows how to trade is going to tell you the same thing. It's all about knowing how to manage your equity. That's what trading is about. So I hope this rant and video was insightful and maybe you took something from it. You could get at me on my comments. I'll answer maybe some of the suggestion you feel I need to make on my next video, or get at me on my Instagram. The same thing, Yasuke on charts. It's actually spelled Yasuke, but it's pronounced Yasuke. So it's Yasuke on charts. That's my Instagram. On my Twitter, Yasuke on charts. Hope each and every one of you has a good trading week. It was a bank holiday today. I didn't look at the charts at all. I just needed to sleep because I had a long ass week, right? Previous week was fucking tiring. So I just needed to get enough sleep. Just rested a bit. Didn't do much. I'll I'll look at charts this night. Look for what I can get on GBPUSD for the remaining 4 days of the week. I'm still bullish on price to practice my invalidation level, so I'll be looking for probable buys into the week. Bullish on NZD bullish on AUD those are my short USD card, but I feel USD card might rally up to 1.3 level before going short. So that's basically just it. Have a good trading week, guys. I hope you took something from the video. If you didn't take anything from the video, well, I'm happy I wasted your time. But yeah, I'll probably post a trade review at the end of the week or into the week. Save, guys.